Never run out of battery again with the INIU portable charger, the slimmest 10,000 milliamp hour power bank that keeps your devices charged on the go. Stay powered up wherever you go. Click the link in the video description to shop now on Amazon.
Folks, listen up. The world of finance just got a major wake-up call. According to Bitwise, we're on track for an unprecedented $420 billion influx into Bitcoin by 2026. That's right. The trajectory is underway, and it's being fueled by something called the rapid adoption of Bitcoin ETFs. Now, let's dive in and explore this phenomenon. In just 1 year, these products have reached $125 billion in assets under management. That's 20 times faster than gold-backed ETFs at their launch. For Bitcoin advocates, this is confirmation. Bitcoin is conquering its status as the safe haven asset of the 21st century. We've got 3 scenarios emerging on the horizon from Bitwise. In its most moderate scenario, states would allocate only 1% of their gold reserves to Bitcoin. Some American companies would hold a reserve of 10%, and asset management platforms wouldn't go beyond 0.1%. That's $150 billion in inflows, a contained but real confidence signal. But the scenario favored by Bitwise is where things get interesting. States would reallocate 5% of their gold, companies would double their exposure, and asset managers would commit 0.5% of their portfolios. This movement would absorb 7.7% of Bitcoin's total supply. At this point, Bitcoin wouldn't be a speculative bet anymore, but a true strategic realignment by major global economic entities. The most ambitious projection calls for massive adoption. States would allocate up to 10% of their reserves, sovereign wealth funds would fully position themselves, and companies would quadruple their holdings. The result? More than $600 billion in inflows and 15% of the BTC supply absorbed. In this scenario, Bitcoin becomes the reserve asset of a post-dollar world. Now, let's talk about the challenges ahead. Giants like Goldman Sachs or Morgan Stanley, managing over $60 trillion in assets combined, still hamper access to these new products. But if Bitcoin ETFs establish a performance and compliance track record, we could see a flood of money crash into crypto markets. By 2045, companies could hold 50% of Bitcoins in circulation. The question arises, is Bitcoin becoming a tool of corporate sovereignty, or will it remain the people's asset? That's open to debate. As we move forward, it's clear that the world is evolving, and adaptation is the best weapon to survive in this undulating universe. Originally a crypto community manager, I'm interested in anything directly or indirectly related to blockchain and its derivatives. The views expressed in this article belong solely to me and should not be taken as investment advice. Do your own research before making any investment decisions. That's it for today's Bitcoin Bulletin update. Stay tuned for more insights into the rapidly changing world of cryptocurrency. We'll keep you informed about the latest developments and trends that shape the future of Bitcoin and beyond.